Good morning. Today is Wednesday, November 13th, and you're looking at the NASDAQ market site here in the heart of New York's Times Square. I'm Marino with your global markets report today. It's a cold day for New Yorkers, and it's a down day for markets. U.S. stock index futures are pointing to a slightly lower open when trading gets underway later today, and virtually every international index is off this morning on uncertainty surrounding the Federal Reserve's decision on when to taper back its $85 billion a month bond purchasing program. For the latest on all overseas trading, we're going to go now to London, and we're joined by Laura Boyd in the Deals London newsroom. She's got all the latest on the overseas action. Laura?
Hi, John. Yes, people, of course, very worried about the Fed's next move. Asia hasn't helped. The Chinese government finished a very closely watched economic planning meeting yesterday. They issued a series of communiques. People had been expecting reforms and quite sweeping liberalizing measures. The end result was rather lackluster, rather opaque. People still reading through the fine print. The government talks of a decisive role for the market in allocating resources, whereas previously it had defined the market's role as basic. People aren't quite sure what that means. They also say that China will stick to the dominant role of public ownership. That's a bit of a disappointment for people that thought that China was going to announce yesterday that it would open up its state-owned enterprises to foreign investments. The Hang Seng down 1.9%, the Nikkei down 0.15%, and as you'd expect, Chinese mainland indices down sharply as well. Over in the UK, the FTSE is down a fair whack. Unemployment for the third quarter came in lower than expected. The rate is 7.6%, and the Bank of England has just said that the rate may fall to the 7% threshold at which it will consider raising interest rates as early as next year. That's obviously worrying people. In Germany, the DAX is also down, and the CAC 40 is down a little more. Banks are among the main fallers in Europe, including Standard Chartered on a sell recommendation, Barclays, HSBC, Commerzbank, Deutsche Bank, you name it, they're down. Back to you, John.
Thank you very much. That was Laura Boyd checking in with us from the Deals London newsroom. Back here in the U.S., we're going to take a look at our wall from some stocks you want to be keeping an eye on this morning. First off, shares of Potbelly are moving higher in pre-market trading. On Tuesday, after the close, Potbelly reported fatter than expected earnings. The company earned 15 cents a share, and that was 6 cents better than forecasts. Revenue also was up to 12%. That's $78 million. Taking a look back at our wall now, taking a look at our Macy's chart. The department store so far is up about 19% this year, and earnings are coming out later this morning before the bell. Expectations there lining up at 39 cents a share, and that's up slightly from the 36 cents a share that the company reported a year ago. Again, now back to the wall, taking a look at Cisco. Cisco will report earnings after the bell today. Expectations for the West Coast tech company are for profits of 51 cents a share. That's up from the 44 cents a share that Cisco reported over the same period last year. A solid quarter here would really mean a lot for Cisco to close out the year with consecutive beats. Already so far this year, the stock is up more than 20% in 2013. Back at the wall now. Even though Cisco is reporting numbers today, Cramer is not picking the stock. In our action alert this morning, Jim says that he is taking profit and unloading some of his Cisco shares in advance of the quarterly numbers that are coming out. Instead, he says he's a fan of Xilinx, which is growing net income superior to its peers, and Adobe, which he is calling a secular growth story. For the latest market news, please visit us at thestreet.com throughout the day. With all of your global markets report, I'm Marino. Have a great day.